Hey, my name's James Nicholson. Welcome to my channel. Another big lender is cutting rates. This is great news. There's so many lenders at the moment bringing their rates down. Now, these rates that we're going to talk about today are for buy-to-lets, residential and purchases. So there's some really good rates in here. They're moving towards that 4%, which is where we want to see as soon as we can. But right now, if you need a mortgage today, you want to buy a property, an investment property, a residential property, or you need a remortgage, this could be a good lender to consider. So before we jump into this, as always, do subscribe to the channel and hit the bell notification if you haven't done already. Then your next task is to smash the like button or tickle the like button. Do something to the like button. Now, we get comments every day. Why do you ask that? Well, it's for the YouTube algorithm, so it really helps us get more views on the channel. So what's it going to do to you? You're not going to die if you touch that like button, so do it right now. It is Christmas week as well. So, what is going on? Well, rates have been going crazy, particularly if you really think about it. Try and recall this time last year when we had the mini budget, we had Liz Truss as our Prime Minister for a day, and things were going absolutely crazy. Back then, you'd have been lucky to get a rate at 6.5%. In fact, some lenders stopped lending for a very short period of time. It was carnage. Now, since then, inflation is moving in the right direction. We're going to get some inflation data this week, and we want to see what actually finally happens with that inflation data. So, because the Bank of England held interest rates last week, that meant that lenders are now getting more comfortable. The swap rates, which is the rate that they borrow at, has been reducing as well. That's been down for 5 consecutive months now. And because of that, that's why we're starting to see some really good rates. Now, this is virgin money. There's 2 things here that I need to talk to you about. One is the rates and 2 is the term. That term bit is very important. So we're looking at virgin money, a big lender. Maybe you've used them, maybe you haven't. This was BlackRock before. No, Northern Rock it was back in the day. So Richard Branson bought them. So let's look at the rates that they've got. So on a new purchase, they've got some really good rates. They haven't broken it down for all this stuff here, but they've got rates from 4.54%, which is good. So if you're looking to buy something on a residential basis, 4.54 is a good rate. Now let's look at some remortgages, because this is where people have been stuck. And they've got a deal that expires or has expired. Maybe there are some people that watch this channel that had deals expire, and because of the higher rates, the affordability didn't stack up and they couldn't refinance. Maybe this will help them be able to do that now. Now, if you took a remortgage with them for 2 years, the rate would be 4.59%, which is pretty good. The fee is 1%. Which is not bad. We've seen some really big fees. And so these are starting to get better now. And they would only lend that to you if you had 60% loan to value. So you need 40% equity in there. So that's not a bad rate. Now they have another buy-to-let, a remortgage rate. These are residential, sorry. And that's at 4.69%. That's also for 2 years. It's also got a 1% fee, but you can get this one with less equity. So that's if you've got 30% equity, 70% loan to value. So those are remortgage rates. They're not bad. I quite like those. Buy to let next. Remember, we're going to talk about loan terms in a minute. This is big news and it's going to make a big difference. So buy to let rates. We normally get terrible rates on the buy to let. These are pretty good. So they've got a 2-year fixed. And this is 2 and 5 years. So it's the same for some reason. Normally these change. But they've got 4.59%. The fee is 2,195. Loan to value 75% because it's buy to let. They've got another 2-year deal, which is at 4.52% with a 3% fee, which is not bad as well. And then there's a 5-year deal, which is cheapest deal they've got, 4.44%. It's cheap, which indicates they feel interest rates are going to go down. That's got a 3% fee as well. So interesting rates here. Now, looks like they're doing this play around with the numbers, so it gets harder to figure it out. So you need to do some numbers. Some of their rates now have a fixed fee. Some of them have a percentage fee. So that's interesting. So make sure you figure that out, which one works for you. Now, what also they've said is they're now going to start doing 40-year mortgages. Doesn't impact buy-to-let because you only pay interest only. But a 40-year mortgage makes a massive difference on a residential mortgage. And here's why. Affordability. So this means that people that couldn't buy, first-time buyers, can now stretch that mortgage over 40 years. They're going to pay a lot more back in interest. But here's why I'd consider that. Because what you want to do is get off of renting and get onto the property ladder. Long term, if you're in it for the long term, it will come good. Now, I'd still use the principles that I talk about on this channel. Buying something you can add value to. So I wouldn't be buying a new build with this, but I would be buying something that I could add a bedroom to, do some refurbishment work to, add an extension to, something like that. I would consider buying on 40 years. Now, a lot of people will watch this and they'll say, well, the interest is crazy. You're going to pay a lot more interest. That's a fact. But here's what can happen. In 5 years, when you've now got equity, you've got a better job, or the house has been eroded, or your debt's been eroded by inflation, there's nothing stopping you then remortgaging on a 20-year deal, and then you'll have still only paid mortgages for 25 years like a normal person. So this allows you to get started on that. And I think this is going to be more common. What I do also feel is you'll have 40-year mortgages. Right now, you need to be able to pay that off by the time you retire. So they'll work out the sector you're in when you're likely to retire. And they'll say to you that you can only have the 40-year mortgages if you're really young, like in your 20s or something like that. But what I do also believe is that those 40-year mortgages will eventually become that you could just pass that on to your kids if you wanted to, and if the kids were happy with that as well. And that, I think, is a positive thing. Now, it will keep some people in debt for longer. Of course it will. But it also gives people the opportunity to just get an asset that they own. And I don't see it as personally a bad thing if you understand money, and if you understand that you can flip that mortgage at a later date, reduce that term, take that mortgage payment to basically complete it and get the mortgage paid off early. You can do that. So this is Virgin Money. It's another good news story. This is good, positive stuff happening at the end of the year. Why is this happening? We did a video yesterday. This video, yesterday we talked about mortgage lending's down 40%. You can go and check that out on the channel. So mortgage lenders have to be competitive. Anyway, I'm off. It's actually Amelie's birthday today, so I recorded this on the Friday. You're watching it on the Monday. I'm not in the office today. Do wish Amelie happy birthday. Do smash the like button. Make sure you subscribe and go and check out some more content on the channel. Go and watch this video right here.